Now, this temporary works which are covered in the project by declaring a separate item. Whenever the breakup of sum insured is given, this is one head, temporary structures and temporary works, roads, because access roads are to be made in the construction site. Then temporary godowns are made, they are constructed, temporary offices, they are constructed. So all these things, they are covered under the policy till the time this road is completed or it is taken into use. And that is why we are talking of put to use clause. If they are taken into use, they go out of the policy coverage. Any temporary structure is covered under the policy only during the time of its construction. During the period, if the loss takes place prior to such road being completed or taken into use, then only those losses are paid. Otherwise, once it is put into use, they go out of the coverage, policy coverage. Okay. This means no loss shall be payable in respect of temporary access road or structure if the same is taken into use by the contractor for the intended purpose.
But it
Same
is
thing.
after the completion of the project, you mean to say, because offices are being
Not
made.
after completion of the project. I am talking temporary structure, because why the loss is not paid? Because after completion of the project, those temporary structure or go down on temporary cement go down, they are to be demolished. They are not the
Yes.
part of project. They are the temporary works or temporary access roads. They are to be demolished. Once the
Yes, sir.
project is complete, those access roads have to be removed. So their coverage is only during the
During the.
period of its construction. Once they are put into use, the this coverage is gone, unless there is a separate add-on cover to take by payment of additional premium. This can be extended. Anything which is put into use, it can be extended further. Which will we will see the respective endorsement for
It
that.
means that these offices and roads are can be put to use during the construction period, no?
Of course, they will be
Yes, sir.
during the construction
Yes,
period.
sir.
Once they are put to use, they are put into
Okay.
operations, they go out
Other.
of the coverage of CR policy
Okay.
unless an extension add-on cover
Thank you, sir.
that we will see.
What
Okay.
is that
The
add-on cover,
basic
sir?
concept is I will show put into use clause. That is put into use clause. I will show that add-on cover in subsequent part. Now, another thing is application of underinsurance. I told you if the sum insured is not adequate, it is required that sum insured shall not be less than total completed construction cost of the property, inclusive of rate, custom duty, and all that. Anna, if any, got to be recorded in the policy. Any changes, if any. Okay. During the construction period, if the contractor finds that erection cost is going to be high, wages cost is going to be high, or there is a change in custom duty, those changes have to be recorded in the policy. However, now what it says, if at the time of loss, if it is found that policy sum insured representing the completely constructed value of the project property, if it is less than the amount required to be insured, what is amount required to be insured? The total completed constructed cost. If the sum insured is found lesser than this value, then it will attract underinsurance. Then the payable, then claim amount shall be reduced in such a proportion as the sum insured bears to the amount required to be insured. That means if the total completed value of the project is found to be 5,000 crore by the surveyor and policy sum insured is 4,000, then that means it is 1,000 crore under insurance, that is 20% under insurance on 5,000 rupees. Okay, it will attract 20% under insurance in that situation. Okay. So provision for installment. What is your query? Quickly ask your query.
For example, sir, if at the time of loss the project has been completed 70%, then how would we,
In that case, again, even if it is completed 70%, but sum insured will be completed, will be compared with total completion value, not
so we
with
will have to Okay.
Huh?
So we will have to project that the amount spent at the time of 70% of completion to
हाँ हाँ
100% value.
इसमें वैल्यू एट रिस्क का कंसेप्ट नहीं है बॉस देयर इज नो
Okay.
कंसेप्ट ऑफ वैल्यू एट रिस्क which is
Okay.
there under fire policy. So if it
Okay.
is 70%, so sum insured, no, it will not be compared with 70% of total completed value. It will be
Okay.
compared with 100% completed value at all
Okay.
time during the construction phase, during the
Okay.
policy period. The sum insured is already declared in the policy, and
Right,
that
sir.
sum insured should represent 100% completed value of the project.
Okay.
Forget about 70%, 30%, or 50%. Forget about that. Irrespective of that, at any stage, the sum insured will be completed with total completed value of the project. And that surveyor will recalculate. So
Sir,
if you have intentionally reduced the sum insured, you will be penalized at the time of claim. Now, installment provision. There is a provision of payment of premium in installment. What are the conditions? Quickly we see. This is for beginners. Installment facility can be given subject to condition. Policy should be more than 12 months. If it is 9 months policy, no installment facility. It has to be more than 12 months. Another condition is very important. Last installment has to come at least 6 months before the completion of the project. Okay. So if it is 48 months project, so last installment, the calculation should be done in such a way that last installment should be recovered by the end of 42 months, 6 months before the expiry. So by 42 months, everything should be collected. 100% premium should be collected. Another condition is minimum gap between the two installments should be 3 months, not less than 3 months. So there cannot be monthly installment. That facility is not there. Minimum gap has to be 3 months. Okay, just to avoid complications or accounting problems, insurance company says minimum installment gap should be 3 months. First installment should be higher, 5% higher than the rest of the installments. I have given one calculation also. I'll just show on the next slide, just for the sake of explanation. First installment should be higher by 5%. In case of major loss, all pending installment has to be completed before settlement. No more installment facility after a major loss which has taken place. Okay. So everything pending installments have to be collected. Collected means they will be deducted from the claim amount. And that amount will go to the premium account and claim will be reduced by that. 100% collection has to be done.